Hello, my dear students. Welcome to online accountancy class. Now, in this session, we are going to consider one numerical problem, and it is the last problem from this chapter, death of a partner. In this problem, we are going to consider all details, and as per present syllabus requirement, no need to show all these details. But as we are getting similarity with the retirement of a partner, so therefore, just we will consider on the basis of retirement, and mainly in this chapter, like calculation part is important, like calculation of value of goodwill of deceased partner, calculation share of profit. So calculation part mainly important. Full practical problem will not come, but for better understanding we are considering this problem in details. So this is a problem, numerical problem. There are three partners X, Y and Z in the profit sharing ratio 5:3:2. The balance sheet as on 31st March 2018 as below. That exactly same type of balance sheet, all are known term we can see here. Liability side creditors is there, investment fluctuation reserve is there, workman compensation fund is there, and three partners capital. X capital 1,35,000, Y 95, Z 74, total capital 3,04,000. Now this is the new term we are getting in this question, that is goodwill, one intangible asset like this one, and like goodwill also appeared in this question. Goodwill 12,000, and we know when goodwill shown in the old balance sheet, how do we deal it? Goodwill we have to eliminate then and then. When any goodwill is shown in the old balance sheet, the first statement cancel the goodwill passing reverse entry. So this is debit and these are all credit. So what will be the reverse entry? This will make like all the partners will capital will be debited and goodwill will be credited. That is called cancellation, elimination entry. Because as per accounting standard 26, no goodwill will appear in the new balance sheet. So therefore, this is the first duty. When goodwill is shown in the, we have to cancel then and then passing reverse entry. The reverse entry means goodwill debit nature, we have to make it credit, and capital credit nature, we have to make debit. Very simple. And this entry also I gave at the time of change in profit sharing ratio as well as admission time, how to eliminate the goodwill. So this is a new term came here. Patent here 52,000, machinery 62400, debtors 24, and provision 4,000 for doubtful purposes. Investment value 6,000, stock value 20,000. Loan to Z. So the third partner taking loan from partnership firm. It is a liability to the Z and it is an asset to the firm. When any amount of loan is provided to any person, that time the lender it is asset. So the firm, it is provided loan to the Z, it is asset to the business firm, whereas it is a liability to the partner individual Z. Cash at bank, very nominal amount, only 600. Again this year losses as a profit and loss account, debit balance 1,50,000. Again losses, undistributed losses, which was heavy loss 1,50,000. Total balance sheet 3,36,000, whereas that particular year only losses 1,50,000. If that loss is transferred, then their capital will be decreases. Now after all, one more term like Z, drawings also made, that was not deducted from his capital. So drawing of Z 12,000 is there. So one way Z is taking loan from the firm. Again partnership firm loss arises. Again Z withdraw from the business 12,000, drawing maybe 1,000 per month, like that way. But ultimate, the last balance sheet till his total drawing 12,000. So both the sides 3,36,000 is showing. Now let's see which partner going to die, which partner died here. Yes, Z, third partner here died. So lot of problem related to the Z. Again Z is died here. Died as on 1st April 2018, and X and Y decided to change their profit sharing ratio into 3:5, means new profit sharing ratio is provided 3:5. And we know when new profit sharing ratio is provided in the question, first duty to find out the gaining ratio and sacrificing ratio. It may happen that not only death partner sacrifice, some remaining partner, those who want to continue the business, they also like sacrifices. So therefore you have to calculate that gaining ratio, and you have to find out who are the partner who are sacrificing. Only death partner alone sacrifices, or some other partner who sacrifices. This is our first duty, to calculate the gaining ratio and new profit sharing ratio provided. Now other adjustment, other like as per agreement, these are the additional information. First of all, goodwill of the firm is to be valued at 2.5 years of purchase of average of 4-year profit. So 2.5 year purchase of average profit from the last 4 year. So here it is provided first year, second year, third year, and 1 year. This current year here heavy loss 1,50,000. It is provided here. So fourth year profit, we have to calculate the value of goodwill. Now next adjustment, stock was undervalued by rupees 14,000. So as per rule, if undervalued, that is not right, you have to show the correct figure. So you have to increase this. If undervalued, then you have to overvalue, means you have to show on the revaluation credit side to increase that amount 14,000 and to show the correct figure. Because in our books of account, we cannot show any undervalued or overvalued. Machinery overvalued by rupees 13,600. That is also error. Why the machinery value is showing over? We should have to show the correct figure. So it is overvalued, means we have to decrease this. Next adjustment also there. All debtors are good. Very nice. All the customer is very good customer. Earlier it was thought that some doubt is there, 4,000 amount we cannot recover, but at the time of death it is disclosed that all the debtors are good. Not only that, a debtor whose due was rupees 400 was written off as a bad, means bad debt already written off 400, but that person paid 50%. So recovery is there, means out of 400, 200 we got. This is called bad debt recovery or bad debt dividend. 20 is there, cash account debit to bad debt recovery to profit and loss adjustment, or bad debt recovery to revaluation account. Same matter, profit and loss adjustment account, and on the name of revaluation. Now after that, out of the amount of insurance premium which was debited entirely to profit and loss account 2,200 be carried forward as unexpired insurance premium. So this is also one mistake made by that accountant, that entire amount which was considered on the profit and loss account, though this amount is for coming year prepaid, you should deduct it but not deduct it. So it is prepaid expenses, which is called asset. Increase of asset, simple thing. Increase of asset we have to consider on the credit side of the revaluation account. Rupees 1,000 included in syndicator is not likely to arise. Very nice. 1,000 rupees no need to pay to the creditors. So that way fund increases, fund enhances to the business. One more thing, a claim of rupees 1,000 on account of workman compensation to be provided for. So workers side also benefit are getting by the partnership firm. Only 1,000 accidental claim came here. Let's see the workman compensation fund, how much is there. This is the workman compensation fund, total 7,000. So out of the 7,000 reserve, only 1,000 claim came. So that 1,000 we will take on the liability side of the balances. Remaining 6,000 we have to distribute to the old partners. We know the rule. Now one more adjustment. Investment be sold rupees 8,200 and a sum rupees 11,200 be paid to the executor of Z immediately. So here investment value revalued figure is 8,200. So we have to compare here investment value, it is increase or decreases. Investment value here, investment value 6,000, investment value is there. Against that, investment fluctuation reserve is there. If investment value decreases, then we can utilize this reserve. But here the investment value, the market value, it is increased to 8,200, means 2,200 more benefit arises. So therefore, this reserve is not required. This is totally excess. We have to distribute to all partners in their old ratio. But if by chance the investment value decrease, then we can utilize this reserve. Mainly this investment fluctuation reserve is maintained for investment changing purposes. If it is decreases, then we can utilize. But if investment value increases, then ultimately more benefit came. That time entire amount will distribute. So this is the investment related investment value increases. So that was the last adjustment. It is a long considering all details adjustment. Now once we will see the solution in a simple way. Kata's value decreases, so buy side stock value, it was overvalued, it was undervalued, so we have to increase it. Provision for doubtful debt no more required, so why provision for doubtful debt? Investment value like increase by rupees 2200, so by investment bad debt recovery 50% of 400, that is 200 by bad debt recovery, and prepaid insurance 2200. And this side machinery value, it was overvalued, so it have to decrease by passing to machinery account 13,600. Credit side is more than the debit side by rupees 10,000. That is called profit on revaluation, and that will be transferred to all partners including debt partner Z also. 5,000, 3,000, 2,000. Now we'll enter the next partner's capital account. Opening balance provided 1,35,95,74. Once you can check that balance sheet here, that same amount is there or not. Yes, 1,35,95,74. Not only that, here these two undistributed profit are there, so that we have to consider here. So by balance BD, the same amount. Opening balance we are from taking from old balance sheet. Revaluation profit just we calculated here. That amount it is transferred here, profit part. By revaluation 5,000, 3,000, 2,000. Investment fluctuation reserve, entire amount we have to provided. Workman compensation reserve, remaining amount 6,000 it will be credited. Now that part like related to the treatment of like goodwill, that is agreed value of goodwill, that treatment. And one more thing, already first time I told that already goodwill FER which is have to eliminate, that is partner's capital to goodwill. Now drawing you have to cancel, drawing you have to transfer to respective accounts. So Z capital, Z withdrawn, so therefore Z drawing to Z capital, sorry, Z capital account debit to drawing, like it is a cancellation entry. Capital will decrease, so Z capital account debit to drawing. Drawing it was a debit balance. Once you can see here that balance sheet here, it is shown on the asset side. Yes, Z's drawing 12,000. Now you have to cancel here, so you have to make credit. And what you have to make debit? That capital. So Z capital account debit, reverse entry Z capital account debit to Z's drawing. Ultimately Z capital decreases. So here therefore this way posting we have done here, and that is Z capital account debit to Z drawing. And this is elimination of goodwill. Undistributed profit, there is huge losses, undistributed losses are there, so that is being transferred here to profit and loss account. 1,50,000 in their old ratio to all this partner. Now this part regarding the treatment of goodwill, this part and this part. So for this we have to check the working first of all, how you calculate the working. Here we have shown the balance sheet also. This is our working. Calculation of gaining ratio and sacrificing ratio. This is a X new ratio minus old ratio. 3 by 8, 5 by 8. This is provided in the question, and this is the old ratio 5 by 10, 3 by 10. So here you can see here instead of gain of a remaining partner, X also sacrifices. So Z sacrifices as well as X also sacrifices. So here only the one partner Y is the gaining partner. So Y have to compensate to the both the partner, to X to Z also. So like this way, total goodwill value also. First there is calculation of goodwill. first year, second year, third year, fourth year. Last year there is a current year like loss arises, therefore it is a minus negative figure. After calculating, we got the average of it 1,12,000 divided 4, it is coming 28,000. Now value of goodwill is 2.5 year purchase. So 28,000 into 2.5 years, that is coming 70,000. So out of that 70,000, like Z's share will calculate here 70 into 2 by 10, that is 14,000, and X share, that is 5 by 14, that is sacrificing ratio. 70 into 5 by 40, that is 8750. So here gaining partners capital account debit to the sacrificing partners, therefore Y's capital account debit to X capital to Z capital, and this two respective figure we have to consider. So this is the calculation regarding the agreed value of goodwill, and here is that like treatment here. Y's capital account debit, Y's capital account debit to X capital as well as to here actually gaining partner Y's capital account debit to X capital as well as to Z capital. So this is like treatment of goodwill here. The Y's capital account debit to X capital, Y's column, Y's capital account debit to Z capital, Y's column. So as this is only the gaining partner, so therefore his column, both the amount will come. Then you have to pass the respective contra entry. So here reverse entry you will have to pass by Y's capital, and both this like figure like sacrificing partner X column 8750, this amount 8750 as well as 14,000 also here. So this is related to the treatment of goodwill as one remaining partner here sacrificing, that is X. So therefore this entry you have to pass here. Ultimate entry is that the gaining partners to sacrificing. Here only Y has gained, so therefore Y has gaining. So he has to give the benefit to the both the partner. Therefore his capital is decreases by this two amount. Now after that it is mentioned that then in like here 1,000 like Z loan 1,000, and here to Z executor 47200. Z has taken also loan. Once we can check from the old balance sheet here, Z taking the loan, yes, loan to Z 1,000. So that also we have to close by passing that reverse entry like partners capital account debit to Z loan. So Z partners capital to Z loan, that entry here it is shown. Yes, this is the entry for loan taking purposes, Z loan. After that, we will calculate that is total entire amount of Z 92,600, and we have to deduct all this, and this is the residual amount, the remaining amount which you have to transfer to the executor of Z. So this will goes to the balance sheet, and these two like remaining partners balance you have to find out, that is X and Y. They are remaining partners, they are continuing the business, so this will also come to the balance sheet. Just last information purposes, though it is not important for our exam ground because presently it is excluded, but once I have shown only this sum, that Z executor, this is from here coming here, Z capital to Z executor account file will open here by Z capital for 47,200, and then immediately payment made Z executor to bank 11,200, remaining to be transferred to Z executor loan. So that way you can open the executor, but this is not important in our exam ground because present syllabus it is excluded. Now once we will show the balance sheet as it is, like just like a retirement, all are revised figure. Patent machine stock data prepared, these are all revised figure. Creditors as it is like 1,000 decreases, executor loan came, workman compensation claim only 1,600 distributed, and this is the present capital, and this side here bank balance it is converted to bank overdraft. Here only 600 is there in the cash at bank, and here amount paid immediately 11,200 to the executor, so therefore it is minus 11,200, and this one like 8,200 as well as 200 battery recovery. These two here came for sale of investment as well as battery recovery. So therefore this is a plus 600 plus 8200 plus 200 minus 11,200. It is coming negative, therefore it is called bank overdraft 2200. After that, both the balance will be tally. Asset side equals to liability side. This is the long question and details. Like this one question is sufficient, and its solution, like lengthy solution, I think so it will help a lot to our learner. So please go through in details. Thank you very much. We are going to conclude this session.